All right. I want to start with a monthly check-in from Glenn. This is his brown belt test. So what he's got to do is provide the monthly check-in. This is actually for a week. I want you to just notice the dates here. So this is from Monday, March 16th to Friday, March 20th. He's got a total of 25 trades. The best trade was 1.23R. The worst trade was minus 0.83, so that's good. He's got 17 wins, 4 scratches, and 4 losses. That makes it 68% winning trades with an average win of 0.7. 16% losing trades with an average loss of minus 0.47. So that's about a 3-2 payoff on a win rate of 4-1. Just let that sink in for a minute. 25 trades, so that averages 5 a day. Average win 0.7, average loss minus 0.5. That's a 3-2 win, 3-2 payoff, and a 4-1 win rate. I'll let you just study the numbers real quick, and then here's my markup of it. So if you're at home, pause the tape and figure out how you would look. So here's how I go through it now that we're back. The first thing that I look at, let me get my bouncing ball here. So the first thing that I'm going to look at is I come over and look at the histogram, and I'm looking for 3 things. No losses greater than 1R, correct. And a normal-ish looking distribution, so it resembles something like a normal curve that is found in nature, correct. And it has a fat right tail with possibilities of R's better than 1, and it does. So that all looks good. I look at the path next of the cumulative R capture. That is comforting. That looks good. I look at the next at the rolling R average, and I see that after the about 10, this thing has started to stabilize. It has stabilized at an expectancy of 0.4, so it is stabilizing at a sustainable, satisfactory level. I look at the trade sequence plot. There's nothing out of the ordinary here. This has a natural feeling to the distribution. And again, the worst loss occurred early, and most everything is less than a minus 0.5. Has a tight cluster of gains and a reasonable number of bigger wins compared to the average loss. So that has a natural, correct feel to it. I look at the stats that we just reviewed. All of that is good. 3-2 payoff, 4-1 win rate. That's correct. The SQN is 3.7. If you normalize that for 100 trades, that would be an NSQN of 7.47. So that is tradable. Here's the number 6. Oh yeah. So then I just kind of look at the facts and the sequence and his rolling R total, and that's the expectancy number that produces this curve over here. And the cumulative score produces that path, so I sort of know what that's going to look like. Number 7, I'm just checking. Yeah, but it's over the course of 5 days. Then I come down and look at his commentary. He was calling it quits for the day and the week, and he missed a day with the biggest moves in both directions, which I'm going to go through on mine. So to be able to knock that out really in just 4 days and taking a day off on Friday is nice. And his comments are calling it quits for the day and the week. And so I want you to note the environment that he's operating in to produce these numbers. My work has kept me on an erratic schedule, so it was catch as catch can. I'm satisfied with the results, but I know I can do better in this market environment with a more consistent schedule and more screen time. One of my key takeaways this week was maintaining the professional mindset. I need to schedule time for the tasks of trading, especially planning and assessing, that are not which are other than executing trades, so that prep and assessment work. So I then draw my conclusions. I say the conclusions from evidence, we are seeing professional performance here, and my guidance is continue to march full speed ahead. That is a very satisfying set of stats, and especially under those conditions. So if you can only trade opportunistically in a market that's erratic as this and has the world feeling like it's on fire, and you're doing that, you got something. Okay, so that's what I want to say about that. Well done, Glenn. Next up, the closing comments on the trade of the trades of the day. So here we are with today's range, gapped up, and then I'm going to show you some trades that were poised to go out of this world, and then discipline kicked in, and we did the things that we always do, and it survived and thrived. So it closed very poorly at the recent swing low at a 40% sell-off at the bottom of the 10 and the 30-day range. The 10-day range now is here. The 30-day range is there. We are deep into the river. Short side bias. The MACD line is reading at minus 43. I mean, holy smokes. The RL270 is continuing to decay at 316.5, and the RL10 is down here at 222. So that's a 35% difference between the long-term hope, long-term buy and hope, and current trader's price. See, the price ladder that comes down goes all the way off to the left, way to the left of the chart. Let me show you that real quick, just so you can see where those red lines are being carried over from. You have to go way back. Way back over here to all of these Z3s and yeah. So you get these lines, this line. Oh, you even got to go further than that. Sorry. This is crazy. Look how far back you got to go to find these bellies of the dragon. We're talking, 2016 range. So this is 3 and 4 years ago to get to these price projections on these thick lines. So all of that is getting brought back over to multi-year support levels, which are not really support levels at all. This is still free fall territory. On the upside, breakout above the 1 day. Well, actually, the Monday's opening, we closed well below that. That was the collapse. 1 day high, and which is also the skin of the dragon, spine, far skin of the dragon, and the Z1, Z-1, the PSAR flip, a 2 day PSAR flip. This is a 10-day high. Bollinger Band mean in the RL90, fair value. This one is a hump of the RL270, so that's the peak fair value. So it's sold off. Peak fair value sold off like 8 points. This is the 30-day high, and then that is the Z3 excursion on the upside. So that's our pricing ladder on both directions. Today, the S&P ended up down 4.5. Everything in the red on dailies. Treasuries are daily fall and weekly summer. S-Dow, that's the inverse triple Dow, and the inverse oil are both on daily summers, weekly summers, and monthly springs. And the volatility's on a monthly spring. And oddly, Cisco on a daily spring. So nothing to love there. So let me shift to the trades of the day. There's a lot of really good lessons on this one. So this is my boy Sun Wukong, the Monkey King, the irrepressible force of nature that stands in opposition to all of history and culture and is the most rugged individual of all. Great sage monkey, and he is the force of courage against all odds. So I went into the day feeling really good because of a limit up opening and very strong recovery in the futures. And then there was a gap up opening. So I want to show you where we're at here. So, dang it. So this is the close of yesterday, and then the gap up opening is here, so you can see that. So the gap the yesterday's VWAP closer. So the gap up opening was like 2% and limit up, and then took off really well. Two horns of the dragon outside of Z2, sold off, found support right around the Z3 opening. And then I felt really good about this. This is essentially the RLXD opening with the owl. And so I'm showing this in DIA. I'm executing it in UDAO. So I'm buying the RLXD right here. So that's like a 50. Let's see this. This is a 50-cent risk. So I'm putting it at the belly of the dragon. I felt so good about this, I said at the time, all in on the 4 bullets. So normally I go bullet at a time. I put all 4 in on this one on DIA. I felt at the close of the market yesterday was an exhaustion and the limit up. That would have been the second day of continuation in a row. So I felt really good. So I just decided to put them all in right here on a single position. And then I looked at this peak of the RL10, and I said, if it gets above that green line, I will use maximum leverage if it clears this hurdle. So I'm in. Now, as I'm managing this stop here with the PSAR, oops. By this point, the PSAR has eclipsed my my entry. So now my stop is here, and now I'm no lose plus dinner for 2, and that's when I feel this. Now mush you Huskies, Jai-yo! Add gas. Now go. That is the psychology I have in my mind, but it's being guided by the architecture and the discipline of trade geometry. Okay? So that's the spirit of Jai-yo, Battle Warrior. At the same time, I'm trading speculatively Virgin Galactic. This, at the same time this morning, had a Z3 pinch and then a Z2 breakout, which I buy. And then when it breaks out above this Z... Let me put that in there. Didn't even have time this morning to draw that. But when it breaks the Z3 excursion, I have the second position. It runs up. Now as it starts selling off and has this little shape right here, opens doesn't penetrate the dragon and then closes well, is when I decide to go from here to lock this in. And I'm thinking, oh, that's safe. That's going to be okay. Back to the Dow trade, that UDOW trade. So this is the swing trade in UDOW. This is where those 4 positions I've committed to. The gains from that, in my view, I'm going to keep one position on a swing, and so I frame that one as a stop down below here, because now what I'm seeing is that the RL10 has started to turn based on this price action. So if it closes well, I'm going to keep that swing trade. And now I take a look at this, and I'm thinking, on the swing trade basis, Jai-Yo, now mush, row like free men, put your back into it. That's what's in my mind. And I'm looking at the possibilities of this first position on the swing, with the possibility it's got to fight it's all the way through the dragon, through the PSAR flip, to the middle of the river, to the far side of the river, to rejoin fair value up here at 110 on the swing. And this is an entry at 35, and 110 is the upside. So that's going to take a long time to recover that, but that's what this is feeling like to me right now. Meanwhile, we have 10 minutes later, we have liftoff. That position held in SPCE. This was that little where it closed higher, and then from there up, finds a higher low and takes off. So when it clears this hump of the RL10, I add the third position. It goes boom. We have liftoff. And because now I've got 3 positions in on my speculative play, this is where it's appropriate to just lock that in at the trader's price right here, and just say that's going to be my position there. But boom, it feels like we have liftoff. So what I want you to notice is that on the entry versus the, there we go, versus the initial execution risk. Get this locked in, so that's 1165. So 30 cents. And where we've locked this in now, 14.10, so that's like $2.50. That's like 8 execution hour on the first, so that's going to be about 6. That's anywhere from 15 to 20 execution hours in hand at the moment of liftoff. So that feels pretty good. By this time, where I want you to notice this point in the this DIA trade on a 50-cent risk on those 4 positions, and now we're at this point here, and I have now locked in this stop at the PSAR. So I got the P1, and the dragon starting to flatten out, and the RL10 is rolled over. I'm just below this bar. That is my sign of discipline. And I put that stop in, then I come to this chart to make the commentary. 4 positions in on a 50-cent risk. It's $3 in hand on 4 positions, because this is at 200.25 and this is at 203.25. So that's 8 execution hour, if I did my math right. Yeah, from 200 to 203. Yeah, so that's 6 execution hour in a single position, and it's 4 positions, so that's 24 execution hour in hand, Jai-yo, add gas indeed. And I want you to notice that we're just getting ready to test this hump of the dragon here. And that one triggered the entry here. So that is actually an entry on another 4 positions, but using this as the stop. SPCE in the meantime, those 3 positions, this was boom, it came back and hit the stop. It's a 1, 2, 3 exit. Then it came down, found support at the Bollinger Band mean. Lather, rinse, repeat. On the next, getting ready to front run the RLXD, so I just go ahead and get back in here on the single position, paid for by that rocket ship. All right, so what I want to come back to here is at this point, when that second scoop is on and 24R in hand, I'm going to go through an analysis here of our posture of this trade and think about where it's going, because we got a Z3 pinch and now it's breaking out. We got that second group on and a huge win in hand, and it's only as you can see, still early in the morning. It's like 10:40 Central, so we're only 2 hours into the session. And SPC is working its own little... I've already gone through a 1 discipline cycle of cash a runaway rocket, and then reset, and then already lather, rinse, and repeat. So that discipline is already in play. So at this moment, what I want you to notice is at the moment of this entry, this second entry, I can consult this chart down here, and I want to zoom in on this now. From the auto framer, UDOW is on there. The mechanical entry for UDOW today was going to be 36.05, and it was an 8-to-1 reward to risk ratio to the 10-day high. Yesterday's range was $6 in UDOW. The maximum range in the last 200 days in UDOW was 15.5. Remember that number. And the average range, that's not even a range, but the average range was 7.5. So, with that in mind, let's come back and take a look at this little chart right here. So, remember, at this moment of entry, on the second set of 4, we're holding 24 in hand. Come down here to the low of the day, and that's like at 33. You see that's around 33 and some change. And if the average range is about 8, then that means if it just makes an average range off the bottom, so if that turns out to be the low of the day, you add $8 of an average range to that, this thing can go to 41. So this is a $3 move. This is like about a $3 move here. I'm sorry, $2 move from 34 to 36, from green line to green line. That's $2. This thing can go $8 from here to high, all the way up. So it can go all the way up to 41. And then if it's a max range, we put 15 on that. This thing could go to 48. So the important point on this is postured for success. Postured for success. At the moment of adding this second position, paid for with markets money, we're holding 24. This thing could go another $5 to $10 higher on 8 positions intraday, which would be massive. It's gone 2 and gave us 24. If it goes 8, that could give us 100R. So the worst thing that could happen, the worst part of the day, would be is if the stop on this gets hit and I give back 4 execution Rs, which paid for this second set of positions. That's how you use this auto framer to compute those intraday geometries. At this moment, here's where that stop is. Here's where the entrance is, that next chunk of market's money. So to recap, those 4 positions, and if you're using $4,000 of risk capital intraday at 40 cents risk, and that's 40, and I'm using 40 cents instead of 30 cents. That's 10,000 shares, and you've locked in $1.70. That's 17 grand in hand from here to here when you add the second position using market's money to put that next batch of positions in. And you're in a posture to quadruple that if it just does an average range. And then quadruple that again if it goes to 48 on a max range. Meanwhile, the important discipline of on this entry here at 36.05 at the mechanical entry, 35.8, that's a 20 cent actual risk. That's even half the risk that we had down here. That's that solid red line right there. I want you to notice that at this time the VWAP's at 35.20 and the fair value's at 35.30 while we're entering at 36. But the first trade, that RLXD, front running the Dragon, so the Dragon entry would have been like right about here. Still a really good trade. You've locked in from green line to the red line of gains. That's the point. That's our discipline line. So despite all of those feelings that come from old Mr. Monkey King, who put us into that posture to be perfectly poised for catastrophic success, I would consider what we had was pretty darn good success. That's pretty good success, and it's poised for catastrophic success, and we owe that spirit to the Monkey King. However, the discipline, I want you to notice that around his head, this iron circle, this golden circuit of discipline is what keeps him true. So this red line is what discipline means, and so I'm moving this over so you can see the exit that was taken. See the price that came through the red line here on the dip of the RL10? That exit occurs in here, within 10 minutes of the entry. Just so you can see that. This is what discipline means, is executing, despite having 24R in hand, that gets me all out in that blue circle right there on that one that penetrated. That's all out. That's what discipline means. This yellow bar, or this yellow box, shows this is why we have discipline, because of this move came all the way back to the first entry and all the way down to test this initial price level, which would have been the invalidation of this very first one. It came down here and turned right on a dime. Now, I didn't play this short because I didn't have the will to do it, and I was working that other trade in SPCE, and I was getting out of a bunch of other swing trades, as we're going to see. When this whole thing turned and fell through the VWAP, I am covering all of those other speculative longs we went through. So I didn't get this short, but by the time it's down here, I have reset into the zero state, taken care of all the other business, and now I'm entering one long, not 4, but I enter 1, and I'm going to lather, rinse, repeat, and play the second one. It knocked on the door twice and didn't, so now I'm back to not all in anymore. I'm just back to my 1. So we bank about 20 execution R in here. I'll give back a little bit on this, but this is why we cultivate the zero state. So I want you to understand why this morning was different with the 4 positions in here. Under normal circumstances, I would be 1 long here. I would take this one with, that would be the owl. This one would be the owl entry right here. Why is it not letting me draw it? I don't know. This would be the owl entry here. A third position would have been here, or in here as it breaks out above the Z3, and a fourth one would have been in right about here. And then the mechanical entry probably would have just been around the fourth one. So that would have been probably 10R instead of 20. But the discipline, the positive Monkey King feelings that I had here to take that risk, because I've been trading pretty good this week, does not override the discipline of the exit. I want you to notice now, if we can, you have the RL10, a low, a higher low, a higher low, a higher low, a higher low. Notice that this breakdown here, even if you don't get short, and that's amazing if you could get short there, and it would be reasonable to get short here if you didn't have anything else going on. But that's the collapsing dragon. That is the break. That's where the series of higher lows breaks. That's also like a Z2 excursion, if you want to put it that way. And then here's a break of the RL270 and a break of the VWAP. So you could even get short here and still make this. That's a nice move. I mean, that's like a dollar on 35. That's a 3% move in S-Dow from here to here. I didn't play any of that. Time, will, pattern, money. Didn't have the will to be short. And I was busy getting rid of a bunch of other swing trade long speculations that I had started. But by this time, I'm back in the zero state, one position and lather, rinsing, and repeating. And now I have a trade architecture for the day. I know this is in play, and I can trade between these red lines on that one position, and I'm going to stop and get short right here because now this would be a double violation of that belly of the dragon and the RL10, if you will. That is such an important lesson on the psychology of the trader and then the geometry of the trade frames. You just got to know that is the pearl of great price. That is what we support and defend. That is the spirit of the warrior and the discipline of the warrior when you step into the battle circle. That is what we do. So I felt those feelings of the Monkey King early. I felt the sense of urgency to get rid of, instead of trying to turn around and get short on all this, I could have, but I just felt I had to get out of all those other swings on a Friday because of the danger that this felt like it was developing. So that was more important for me to eliminate that risk than to try to exploit this opportunity. Although the dollar figure would probably have preferred me to get short in here, I just wanted that other stuff off my mind and off the tablet so that when I came back here, it was just this trade and SPCE, so span of control of 2, and nothing in the swings. That's absolutely crucial. I mean, this lesson is so, I almost said so goddamn important, but that'd be improper language. But this lesson is so important. This is like the introductory lesson to that whole Tortoise Talent Learning Management System set of lessons that we're doing. This is going to be the centerpiece of the June streaming workshop. This is the lesson right here. This whole day. It has all of the plan, prepare, execute, assess. It has the emotions of aggressive warrior spirit and belief and confidence in that feeling, yet never losing that warrior's discipline of the geometry and the stops and statistics. That's what separates warriors from a mob. Here's the rest of the day as it unfolded, as we're now into tactical trading. So just to review, this is UDOW. This is that first beautiful entry, and then that second entry at 36.01, and then nothing. That's the all-important disciplined exit. This is where I considered the short, but I was getting out, so I didn't get any of this, but that's where you would want to, and I want you to look now. Just be considering all of the MACD 4 seasons. Now by the time I've reset my zero state and I'm getting long again on this thing where I got long before to such good effect, that's the transition between winter and spring. And the owl would occur right about here. Now that ends up scratching. Now I'm ready. When this fails to even get to the VWAP, now twice, it failed, and it failed to get to the VWAP, and you can see the dragon rolling over. This is an owl short in the usual way. Makes a move. I'm got my finger on the trigger ready to cash it, but the VWAP holds. Second position on the collapsing dragon, and owl exit. A low, a higher low. We cross into the summer. This is long. It's above this one, so I'm at no lose plus dinner for 2. I would consider adding a second position above the VWAP and a third position if it gets above the hump of the dragon. So I'm already showing in my head where I'm forecasting where I'm going to make those adds, and I know where my stop is. So this is ongoing trade geometry with the same rules and habits of mind in the zero state that has navigated all the way through this trade. It took this long for me to be able to adopt the short side, and that paid off pretty nicely. So this is, we'll pick that one up again. This is where that, the double scoop short, and then the owl entry and cash in the usual way. It rolled over. It failed to get to the VWAP. It was a lower hump than the previous hump, so this is an auto short. By this time, I'm in here getting ready to add a second short, and I've moved my stop down to here, so this one is in the money. And now we're about 2 o'clock, and that's about the last trade of the day for me, because there's only an hour left and it's closing poorly. And I got out of it shortly thereafter, and this thing closed. It wasn't even funny. That one was so good. Intraday. So I ended up closing this thing inside this. So the short was working this, and I missed this one and missed all of that one that happened in the last 30 minutes because it was just going into the close, and man, enough was enough. What a day that was. But look at the difference now between where it closed and the VWAP and the fair value. That's the emotional legacy of guys willing to hold those positions short over the weekend, betting that there's not going to be any news releases over the weekend that are going to juice this market. Hey, good luck with that position. Not me. Not me, sir. I'm trading this market intraday. Any questions from you guys on that set of lessons? And then I just want to say how, +1 to Glenn on this week, while he was not even close to ideal circumstances to be trading, but he's doing that kind of work as an opportunistic trader, checking in, getting it done. He's going to the river with his buckets, getting the water that he can carry, ropes himself in, and then takes it back and puts it in the cistern, banking it away. That is professional behavior. That's what a successful brown belt test looks like. He's already got his black belt, by the way, because he's come to the live trading and research weekend and done his independent research that was double-blind peer-reviewed, and he did it on film. And that was the groundwork that has enabled him to kind of get to this level. So that's what a brown belt test looks like. He's done these before, but I think he's really locked in. And he's got his black belt because he's been to the live trading workshop and done independent peer-reviewed research, peer-reviewed the work of others, and is capable of self-assessment, designing his own research to improve his performance and to answer his own questions of interest, and contributes to the work of others and receives feedback and applies. But yeah, Kim asked me a question. Yeah, Kim, the PSAR flip and the BBM broken. I stayed in that trade because of that, because I was all in and I had 24R in hand on the way up, and I was using money management stops, and I knew where I was going to put that second position in. As I was putting in that second position, is when I put that thick red line in, and I was going to keep 2/3 of that gain. But when I put the second batch of positions on, is when that red line went in, and then when that got hit, that's when I'm all out. So that's money management positions, and that's the emotional state that I was in. Money management was more important than the technical details until I put that second large batch of positions on. Then the trade geometry took over. So your mileage may vary. If you get out at any of those breaks of the PSAR and whatever, you're still in great shape from that early entry. But that was me playing on a Friday with over 100R gain this week intraday. So I have markets money and that initial batch of trades to go. So that's just kind of what it is. Because I'm already so deep in the money here, I'm just letting that thing run. And you can use Z1 or Z2, but that was all money management stops and conviction. And it felt like this felt like the trade of the year, anticipating it to get up. What was on my mind, what was overriding everything else today, was it'd been a horrible week. Trump had announced massive support to individuals and businesses and has adopted a populist perspective, and the overnight markets went from limit down to limit up, and this thing was climbing the wall, and it was getting close to the point where at this line where that second green dot goes in, that is an on-ramp to the freeway of getting to 41 and 45, and I wanted a full position on that thing. And the worst thing that comes out of anywhere, any exits that come out of this on the way up, is a 10R execution. So that's just me with the that Monkey King courage of convictions on the way up. Money management. So once I got double digits locked in on that one, I'm using the money management stop and the heat until I get the second position in, and then that's when that thick red line, which was this one. When that thick red line goes in, that's when this kicks back in. Yeah, is this close? Yeah, I'm still north of the VWAP. And so if I get out here at 35.20 with an entry at 34.20 on 4 positions, that's 10R in hand. That's 10R in hand here. This is 5R at a place where I'm getting ready to add a position. Even if you get out here, that's 5R in hand. That may be enough. Hey, if you get out here, you got to get back in there anyway. And if you get out here, you got to get back in here if you're following the rules. So you got to make your decision and stick to it and live with the results. But that's the mindset that I'm in. From this moment here, let me see if I can find where is it? This. Is it this trade? No, it's this trade. One more. At this moment of the trade, when I got this thing locked in at no lose plus dinner for 2, dude, I am in this trade. I am not getting out of this trade in my mind, because I firmly believe there's a real possibility of getting to that green line, which is the entrance to the freeway up to 41. In this case, and this is DIA, that means it could get up to like 220 or 230. And then so another, whatever the size of this move from the red line to the green line, there's 3 more to 4 more of those if it can break through that green line. So once I'm in all in here with those 4 positions, and now the PSAR has crossed my entry and I'm in the money, I'm halfway to the move already. That's 10R in hand right there, and all I'm doing is just making sure I'm locked in, and my mentality is go. And I'll tell you, the next step that I move to is locking in the VWAP as this thing starts getting closer and closer and closer. And then when it crosses that green line, that's when that line comes in and says, locking it in on trade geometry to preserve 20R. So you want to know the psychology? That's my psychology when I'm driving my train. When my money's on the line, that's what I'm doing. What I'm telling you is to study the indicators that are leading to those decisions that I'm making, and then you get to decide what you want to do with RLXDs, or do you want to wait for the owl? You can wait for the owl. Excuse me. The owl entry here is perfectly fine, because you know later on in this trade it's going to get to the green line. That's fine. Or put half on here and half here. So if you end up getting out here, you're still in the money, but you only got half a position risk on. I just made the decision this morning because of the reasons I told you, because of market conditions and context and the posture of my trading account from this week's worth of intraday trades, that I'm ready to go on this one. This is the day, and what I want to say is that this posture right here, the name of this file is Postured for Success. At this moment in the green dot on the second entry, with markets money paying for that second set of massive positions, if it hits the red line from right here, I'm banking 20R. And if it breaks out and goes here and does just an average range day, I'm going to be around 60R or 80R because I've got 4 scoops on twice. Going into a Friday after a limit up open, man, that's why I stayed in the trade. But this red line is why I get out of the trade here. So how often do I do that? Not very goddamn often. Only time this week I went all in on all 4 on one trade at the beginning, but that's where I was this morning, so I was prepared with this warrior mindset to go for it today. Sorry, I had to shift the internet connection. I'm not sure how far through that rant. It was all captured on the recording on the local screen. So I'm not sure how far in that rant I got, but it's all about why this trade was so important and being postured for success for the massive gain. I'm talking about a potential 100R trade on top of this thing. And just so you can hear it, that at this moment in the trade, where are we at here? Yeah. At this moment of the trade, when I move him to here and I say, now mush, at this moment of the trade, you notice that the price was above the VWAP and at the fair value, and I've locked in no lose plus dinner for 2 on 4 positions. So my spirit right now, with this old Monkey King spirit in my head, is this is the big trade of the week or the year, because if it gets to here, I know I'm going to have about 20R in hand, and then when I add those second set of 4 positions paid for with the 20R I'm going to win here, that could be a 100R trade. So I am less concerned about the tactical noise inside here because I've locked in the no lose plus dinner for 2, and then this trade exit is going to go up to the VWAP, to the fair value, and then when I put those other positions on is when I readopt that trade geometry. That's explained already, so that you'll hear that twice in this video. Okay. The last thing I want to cover today is the speed runs for the swings, because I mentioned during the during that lecture there that when I was in the yellow zone, where is it? Hold on. Yeah. Well, I was in this part of the trade in UDOW, and the exit hits here because it didn't go to 100R. That while this all is happening under other circumstances, I would be short in here, but I had other swing trades that we're going to go through that I was getting out of, so it's span of control to protect against that moves, and now I'm back in the zero state ready to re-engage on the intraday, and you saw the rest of those trades. Okay. So now I want to get to dagnabbit. If you'll bear with me. Oh crap, I'm supposed to be in my doctoral lessons start at 9. Shit, I guess they're just gonna have to wait for me today. So, quick speed run. Yeah, Friday night is my busy night. So we're just monitoring Alcoa. It held pretty well. That's good. Apple, I decided to get short on the great collapse today. I just, because I don't believe in them, I got short during that, in that yellow zone period. It broke to a new swing low. So I'm short from Apple here. And my stop is going to be there in Z1. Aussie dollar was just monitoring. We covered a short yesterday and just monitoring the it actually had a higher close today than yesterday, or actually a slightly lower close, but didn't even test the swing lows. I'll defer to Eric Morrison on that one. Boeing, I had nothing to do with it today. Caterpillar, this was one of those where I bought it and I wanted it to be above that you may recall. We talked about that big black diagonal line from yesterday. It never got above that and then started selling off, so I just scratched the swing, and then it closed poorly. So tried and got my money back on that lottery ticket. Cliff, just watching. Cisco, I decided to get it. It was open, and I wanted to get long here. It didn't. And then this was part of the great sell-off, and I said, well, you know what, let's just get short. Timber. He called Timber today. And so I tried the long venture, and it gapped up, and then in the sell-off, I just scratched the swing. Chevron. I bought it today. Just again, so you can see the trade. I bought it, and it closed near the gap up. So that was a swing that I kept because the energy actually did better than the rest of the market today. So that was a swing trade I decided to hold. My original stop is still in. That's like a 20% trailing stop. Diamonds we looked at. Devon Energy. I scratched. No, I'm sorry. Yeah, we covered the short, and we're flat on Devon. Emerging markets. We got long on that one yesterday. I'm still in the trade. That's stupid, but here's my stop. It's not unusual to feel stupid. All right, so we're still in that trade, and the stop is here. Excuse me. We got short on EFA at the close, so that's going to kind of balance out the EEM trade. So whatever Monday looks like. I should be neutral by the time the market opens. The EWJ, I still believe in them. We're still long from Wednesday, excuse me, and my stop is still below the belly of the 10. The world feels horrible, but I don't even feel stupid on that one. We'll see. Mexico was just observing. Brazil, short one today at the melt-off. Home Depot, that's one I bought today. I felt really strongly about getting out of this one, and it closed poorly, but my swing stop was down here. I'm holding my nose and holding that swing trade against my better judgment, but that's what swing trading is sometimes. As long as that's in place, it's a long way to Tipperary, long way to Monday. I thought really strongly about getting out of that one. I did get out of the Russell. So I have more of a belief in an individual company like Home Depot than I have in the psychology of the traders trading the Russell Small Cap Index. So that's the difference in those decisions. Nothing in real estate. That would have been one I'd like to have been short. McDonald's covered. So it was a scratch, a fractional. I got long at the open, and then got short in the, not short, got exited in the sell-off, took a fractional loss. Clean energy, just observing. Triple inverse oil had an interesting day. I'm not in it. Too much volatility. SPCE, I covered the short yesterday. I'm studying this one. I didn't keep any of the intraday position. That was the rocket ship move, by the way. This opened and went high and then sold off. So I got paid intraday on the way up on the rocket ship, but I kept nothing over the weekend. Got no idea. That's an intraday play only for me. Simon Property Group, I got short inside here during the melt-off. That's one where the melt-off led me to get short. That's a short I'll hold over the weekend. Treasuries, long today in the melt. The melt down in the market led to a melt up in Treasuries, so I'm long that one on a swing. Tesla, covered the short yesterday, didn't trade it today, but that's one where that doesn't feel promising. But I don't have a swing position on it, but that's what that looks like. Dow oil. Oil, it looks better than the rest of the markets, so let's see, the volatilities are what they are. Walmart, we had been long and then covered, and then the last 2 days have been stepping aside, and it had a big sell-off today too. So if you were, I felt really strongly about getting short right in here. I didn't, but that's one that I'm studying. So Walmart is still really important to our nation. Wheat and precious metals, just studying it and not understanding gold right now. When we had covered the short, I was thinking about getting long, was thinking about getting short, didn't know what to do, stood aside. U.S. Steel, I'm still long this one. I said yesterday why I wanted them. I got long here at the gap up, and so our long is here, and our stop is still below the belly of the 10, and it closed well today. U.S. Steel in the house, so that's the gains. So U.S. Steel's, I like you. I'm with you. XLB, I'm worried about you. Stood aside. Energy, cautiously optimistic, but I'm still short. Still short in here, and it started to roll over, so I'm only short one position there. Financials, we had, I am now short from this location, and I don't mind that at all. I had wanted to get long here. We didn't, so I am short from here. So this thing is now looking like this. Let me draw it the other way. Technology, I stood aside this one. Legitimately, I think you could have gotten short in there. That's not one I want to hold over the weekend though. And then healthcare, just respecting everybody in that. So that's the speed run. I got to head off to another one, but I will do the weekend reports and stuff later. They'll be posted with a voiceover, and then I'll do a strategy session Sunday night. There will not be one tomorrow night, I don't think, but I'll do one Sunday night. If I decide to do a strategy tomorrow, I'll send you guys all a link, but I can tell you right now it's going to be hybrid frog right from the open. I mean, that's what this is, a market with volatility, and you've seen this. I'm not adding new swing positions until I make money intraday, and I'll be ready right from the open with hybrid frogs and the volatility and the indexes. This is a day to study the god dang nightly strategy sessions from all week and walking through and getting your questions set and getting that locked in. That's what you should be doing. Okay? So take good care, guys.